up a little bit. We go down to the 4 hour. Once again, we have a lot of resistance here.
That's tomorrow. That's next week.
We have a lot of resistance here. Even before the breakout, I mean, this was a little potential resistance here.
Yeah, it looked like it. It was a little like what do we call when it condensed?
Well, consolidation, but this would
Consolidation.
be a real small period of consolidation, maybe 30 minute or something.
Right,
Let's
right.
take a look. Yeah, it's a 1 hour consolidation, 1 hour time frame. You wouldn't be waiting too long
Right.
for that to move, but it did act as resistance. So if we was, to draw our, let me see where I was looking at that on. All right, so if we were to, to look at our chart here, we know that we're creating this pattern. We see that there's resistance. There's actually nice wicks coming out of this zone. And even when it did pop back up towards the top, it left a nice wick with a bearish candlestick pattern afterwards. These three impulsive bearish candles, it means something. It means that the sellers are still showing signs of controlling the market. Look at how when we got here, it left a wick and a big bearish candle pattern. Two aggressive candles. Here, wick, bearish engulfing. Here, we have a tweezer top within dojis, but it's a tweezer top. Then we had a bearish engulfing, that followed with that. So we do want to, keep that in mind. We can't just ignore that because we want to see the market go up. So going down to our 4 hour, once again, now I just want to see if there's any other signs that can be telling me that this is selling. Well, I do see this aggressive impulse up. But like I said, this is just our fake out. This was inducing buyers that tapped their stop losses out that were right below this low here, right below the lows. So it induced buyers, and maybe somebody caught a nice quick ride up. But everybody else who got in late to the party or just decided to hold and didn't have stop losses or whatever, it kind of came right back down and crashed. There was two 4 hour candle periods of small movement before it actually broke this low again. Well, 3, right before the breakout. But look how minute that was. Look how minute this was. It didn't really show any signs until it got back down to another resistance and support level.
Oh, I see right here, right over here.
All right, and then we had,
97 some change.
Yeah, about 97.5. When it did, it consolidated. This is consolidation, like a nice case of consolidation. We have the push down, the market gap down, then it shot up.
Touched that
It gave
resistance line
us,
too. Oh,
it gave us some wicks.
Support line.
It gave us some wicks to both sides. It was ranging just in a small fashion. These candles are very indecisive for the most part. And the whole time it was just inducing buyers and sellers, induced buyers. Look at that strong wick. That'll probably call a lot of people trying to buy off the 1 hour to 15 to 30 minute. Then we got a nice push down that's inducing sellers again for the market to come back up. So it's toying with emotions. And then whoever did buy because it was, right here again, and we had wick. Oh, look, boom, market came down, another fake out because it opened right back up into this area, and then we had a bullish push. So like, even though we do have
all the way down, and then it started back at the top of the whole thing.
Exactly.
Damn, that's crazy.
Well, it started up here, and it flushed down real quick. But when the next candle opened, the next 4 hour candle opened right back at the top. It actually opened above.
And there's probably a lot of sellers at that point, right?
There was a lot of sellers down here. blown accounts, blown accounts, blown accounts, blown
Yeah,
accounts when it
blown
came
accounts.
back up here. So
Because
now,
that
even with
looks like it's
these,
gonna sell. So it's like, all right, guys, this is the shot.
exactly,
What's
if
up?
they
Let's
had
go.
this marked up the way we did, okay, well, broke support, it broke support,
Yeah,
it
yeah.
broke resistance, it broke resistance. Strong bearish candle. This is a bearish engulfing by all means. It wiped out this whole block of time right here, right? Strong bearish engulfing. A lot of people were selling, and then the next 4 hour crashed and blew everybody's account.
Crash, blew everybody. Yeah.
You feel me? So even now that we have this bullish engulfing, followed by bullish engulfing, followed by bullish engulfing, we have to analyze that. And it doesn't mean the market is going to, keep buying up because it's creating bullish engulfings. We do got to understand that this is the last impulse from high to low. That's the last impulse. We are in a key retracement area with this 61 to 78%, and I'm just going to draw that in because, like I was telling, having Roski mark up here, that would be, more or less our order block area, somewhere up here.
Oh, hold on. Let me take my fib out real quick. Fib. We're gonna take that fib out. We're gonna put it to the highest high that you see in that frame.
Yeah, so you want to get more, and you want to get more closer to current time, and just grab the last high to low, and it should look just like mine.
Annie.
Yo. Get away from the door. Get away from the door.
Baby. All right, you ready? You ready, Rico?
Yeah.
All right. So now that we got this 4 hour retracement right here, right? We go down, and I'm gonna push out two key things that I'm seeing here. All right. Another market pattern. I mean, I really don't even like to draw it out this far, just to get the ideal. We have this area here that's creating another like channel, or if we drew it out and grabbed this high, we could call it another wedge. All right. Both patterns that we have are bearish market patterns. It's typically telling us that we should be looking to sell, looking for price action to tell us that this market is going to fall, and that we can, take positions for some sells. All right. Now, on your chart, do you still have the RSI that I put up there?
The RSI.
Yeah, you see the little purple chart at the bottom of my screen? This thing here. You see that? If you go into the top of hit indicators and just hit the search icon, just type in RSI. Or hold on, let me see. Yeah, just type in R and choose the second one that pops up, relative strength index.
Relative strength, right?
Relative strength index, yeah. Yo, Rico,
Yeah. Yeah, I'm here.
record this session, bro.
I am.
Oh, you are good.
Yeah.
All right, cool. All right, so so we have our channel, right? We have this channel that we're working in.
Yeah.
We have our retracement, and we have what I call our order block window, which is this area to this area. Potentially, we could see a push back up into this range, but if we do, we're still safe to look for sells around here as well. So,
It's gonna go up to uptrend around
I
the
mean,
zero mark, right? That's like
well, what I would like to see here, just following what I'm, marking up, what I'm saying on the chart, is all indications of bearish action here.
all right.
Look when price. Oh my bad, I didn't want to grab that. Look when price was right back in this range right here. We had the short-term stall out, but we had a bearish engulfing. It, gave us our new low, excuse me. And then we had, what I guess we could call maybe a 1 hour fundamental candle. It gave us a nice bullish engulfing, then a bearish engulfing following it out of this zone. And that's when it really made us move. When it got back in here, we got some slight resistance. We did get a bullish engulfing that pushed back into this zone. But look right after, we got a bearish engulfing pattern right here. We got a nice, I would say, it's more of a doji, maybe a morning star or evening star, excuse me. And then we have our bearish engulfing completion, because it started at least 50% of this green candle here and finished below.
Oh,
all right, so we have
that does sound like a morning star.
Yeah, we have our bearish engulfing, pattern within here. Give me 1 second. All right, so we have our bearish engulfing pattern right in here. Now, why I had you you got your RSI up right now, right?
RSI, the low wave on the bottom.
Yeah.
Yeah, I got 3 of them though.
Just remove one of them. You should see an X, the little X next to it. In the left-hand corner, there's like the eyeball, the gear, and the X. Hit the X on 2 of them.
Man, it's funny. They keep trying to push XRP up and they keep falling back down.
It's an accumulation stage or reaccumulation stage. I think that's what it's called.
I got it coming down to 25, 65, 60, 65.
I'll look at that in a second here. See what I see. Go. All right, so you got your RSI up, right, Rico?
Yeah.
All right, you only got one of them now, right?
Yeah.
All right, so from this area here, the last 2 kind of high areas here, right? You see how we have a high and then a higher high, correct?
Oh, my bad, bro. Hold on. Damn, I got 2 though. I'm not gonna lie.
It don't matter.
I was just about to delete that second one, and then like, nah, I don't even know how I delete the first one.
Do you have any of them on there now?
I have 2 of them.
All right, do you see where it says RSI to the left?
Nah, but I went to indicators, and I went to.
Nah, stop going into indicators, because that's just gonna add more of them. Just go to the trash can on the bottom left. Click the trash can and hit remove all indicators. Don't hit remove all drawings and indicators, because it's gonna clear your chart. Just to remove
What?
all indicators.
Remove all indicator.
Or remove indicators.
Alright.
All right, now it should have no RSI.
No RSI.
All right, go back into indicators and grab another RSI.
Relative strength index.
Yeah, just click it once.
God.
All right, so you have the RSI. We on the 1 hour.
On the 1 hour. Yeah.
All right, so you see these highs right here, this high and this high, the last two highs current to price.
Let me go back.
Like, how does the dollar index how does it affect on GBP and NZD?
It really doesn't, not too much.
So how does never mind. So I'm finna organize my pair based on the dollar indexes of each pair.
The ones that are going to be affected by the dollar index are going to be the ones that have USD in it. So
No, I mean like GBP world currency.
oh, you're gonna position them by pair, by currency index.
Yeah, like I got GBP world currency, and I got GN, GJ, and GA.
All right, well you need well you should add. I mean you're gonna have some cross ones because you got GU as well. You got GBP Chef, you got GBP CAD. So you got a few.
I don't have those on my list.
But yeah, but those are other GBP pairs. But Rico, so you see how we got this move up right here,
Yeah.
and then we have the high. We have this high. Then it kind of gave us a little sideways consolidation, and then it gave us our most recent high right here, right?
Yeah, we got this high. That first one, a little bit of consolidation, kind of retest that trend line.
Exactly. All right, so now focusing on those two highs on the chart, look at the RSI. It's showing that those two high areas are actually making lower highs. It's going downward.
Oh, yeah.
All right, so that is called divergence. If the chart is making higher highs and the chart on the RSI is making lower highs,
Okay.
then we could expect the the trend of the RSI to hold up to the market. So it's telling us that we should be looking for possible sells.
Yeah.
All right.
Yeah.
Now, like I said, on the weekly, the daily, we do have some sort of head and shoulders. Well, we got a head and shoulders on the 1 hour or the lower time frame. We could even switch to, but we have our potential head and shoulders here on this 1 hour time frame.
Yeah, so that's another check mark.
That's another bearish confirmation.
Yeah.
So now that we're on the 1 hour, we see that we're in a nice retracement level. You see that we have a nice, bearish candlestick pattern and bearish market pattern that could be playing out. We're going to go down to even a lower time frame, see if we can find entry opportunity. Now, obviously, since it's Friday, we can't find entry right now, but we can look for something to play off of next week. All right. So, I mean, we already, looking at this previous high to low, we have pretty much a 100% retracement almost. Not really interested in on that, especially because on the 1 hour, this is more of a complete downward move, right? So I'm going to, and I just like using the fibs. You don't have to, but I like using the fibs all the way down. All right, so we have that move, high to low. We have that move now, high to low. This move is showing us, excuse me, that move is showing us that we are also in a 50%, 30, respecting the 50%, currently at the 32%, but we have potential to possibly get back up around the 61.8.
Yo, get up. Get up.
All right, so we have potential to get up into the 61.8 range, even at the 50, because the 61.8 gave us our real breakout. And our nice exhausted retests. The 50% gave us our bearish engulfing in both areas. So these two price points right here, very interested to see how the dollar reacts once it gets up here. Now, I mean, that's just the mark of the dollar index. Now, if we were to, look at target areas for this to drop, if we were looking to take entries on these trades, well, this is our first target range. Then we'd come down to our next support area, our target range here. And then, back down at this low area here. Back down at our support and resistance level. Typically, the wedge or channel patterns are going to give us an equal move down. All right, so we should be looking at a retest back down to the lows here. We should be looking at a retest back down to the lows, and I actually missed that zone there.
Oh, word.
We should be looking at a retest that back down here, because these type of patterns give us a equal distant move, which potentially an equal distant move would be from here to here. So we'd be looking at measuring that move, bringing us actually back down here. But intermediate take profits would be there, just getting us back down to the lows, seeing if we can break it. So with that being said, Euro USD, if we're expecting the dollar to drop, then we have to expect the opposite for Euro USD.
Oh, word.
All right, we got to expect it to rise.
So whenever
at least for the time being.
Whenever the dollar is the second pair, you want to see what the dollar is doing and then go against it.
Exactly, or more or less. Yes, you do, because the dollar is the world's currency. Like, the dollar is the only place that you can really go and still get accepted with a dollar somewhere. You can't go to Africa and with a fucking a British pound. You're not spending it anywhere.
Oh yeah.
Even though Africa is, a lot of Africa is still British based, French based, you're still not spending that dollar there, but you can spend a US dollar somewhere in Africa.
Yeah.
So this is the whole world's economy here. All right, so just looking at Euro USD, we're kind of looking at the upside down version of the dollar index. Are we not?
The upside down version of the index dollar on the euro.
The dollar index. Look at the
Oh
look
yeah.
at actually let me see something. I can do this. All right, so we got the dollar and the Euro USD.
Oh yeah.
And then we're gonna place that next to the dollar, the DXY. That is almost an exact match. It's actually a mirror match. It's actually a mirror match of what the dollar is doing. So if we're getting all of our confirmations of the dollar to sell, then Euro USD should be taking a rise up. Now, all the confirmations that I was seeing on
real quick. How'd you do that mirror?
You gotta hit compare up at the top. Let me go grab my my charger. Yo. All right, so yeah, like I was saying.
You like Euro USD on Oyenda or Forex?
I do FXCM. All right, so on our, let me know when you're ready, when you're there.
Copy, man.
All right, cool. On the dollar, once again, it should, on Euro USD, once again, it should look very similar. Markup high to low. We're at about that 61.8, 71% range, right? Same thing. All right. Instead of seeing a bearish market pattern on Euro USD, I see a bullish market pattern. I see, instead of the rising wedge, I see a falling wedge.
Oh, word.
I can draw from here and capture these highs and draw it across. Now, look how. Okay, one second. Let me grab my.
How do I uncompare?
Huh?
How do I uncompare?
Yeah, you just hit under the main pair sign. You'll see a little thing that says the DXY. Hit the X. So like this.
Hold on, let me go back to it.
So you see my screen?
Yeah.
You see my cursor? DXY,
Yeah.
TP, hit the X right.
I don't even see that.
You don't see? Do you see where it says Euro USD?
Yeah, but I didn't have that under me, so I just had to press back a whole bunch of times.
All right, is it off?
Yeah.
All right. So on Euro USD, you see how we have this trend line here. Grab it from wick. I'll connect the next wick and just drag it across. All right, so we have that downtrend line. Now to make it our market pattern, we have to connect some lows. So I liked how this looked, even though it's not, perfect. I like this originally, but I've seen that, we stopped making lows that low. So I actually grabbed this area here. Just connect that wick down there. So we have our counter trend, 1 touch, 2 touch, 3 touch. And we have our downtrend, 1 touch,
Right.
2, 3 touch, and then 4th gave us our breakout.
Yeah,
So we have another wedge, just like US dollar index. We have instead a bullish wedge.
I see how the market was having the downtrend line as using it as resistance, and then it broke out and then created that support on the trend line.
Exactly. So we had our market pattern here with our wedge.
So now we're looking for the market to buy, since now the trend line is a support.
Exactly.
The market is riding on top of that trend.
Now we have our breakout. All right. So even though it broke out, it gave us our new high. Right. Now, even though it fell, it gave us a little head and shoulders and fell.
Head and shoulders fell.
Falling down, it's falling into a new demand area, a new support area down here. And it's still holding above this trend line here, right?
Oh, yeah, because on that gram, what's that gram, that blue gram on the blue chart on the bottom?
The RSI.
The RSI, yeah, the RSI says so.
Well, the RSI in this case doesn't have anything to do with what I'm pointing out.
Oh, all right.
To you how we can use the RSI to our advantage, because there is something that we can use. But what I'm saying is we have resistance, 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 a little bit of consolidation, breakout, retest, retest, retest of this pattern, and right now it's just retesting this line again. So I like that because it's still playing against that pattern, that bullish, that bullish pattern. All right, and it bringing the market back down to these lows is just giving us a better chance to catch a bigger move. These patterns typically go from the equal distance from here to here. So if we take that move, and we were to clone it, we can expect at least a rally up into this range, because that would be an equal move of the pattern, from the start of the pattern to the end of the pattern. All right, so on Euro USD, we are falling. We can continue to fall to even, come back down into this box, to the bottom of the box. But the RSI is also showing me something that I like to see as well, which is that it is at the bottom. It's at the bottom. Once the RSI gets down to about 30 and under, that means we should be looking not showing us any divergence, but it is showing us opportunity to buy. Look at every time it got to, we'll say even 30, 35. Look at every time it got around 35 on RSI, it bought up. Now, each time's in that area, when we were 35, was right here. We're under 35, exploded up. Here, we were at 35, had a nice push up. Under 35, at 35, pushed up. Under 35, we had a small period where the market just didn't know what it wanted to do. Came back down to 35 on RSI, pushed up. So now that we're at the 35 again or under, it gave a nice spread. We should expect another push up, and it's giving us a at this point. So we're done with the daily. We have what we need to have on a daily right here. Going down to our 4 hour. Now we're taking a look at what the 4 hour can give us. All right, so I'm going to take some of this off. Pattern up. All right, so we could either draw this trend, because this will give us more of a, compacted market. We see that we're still holding above our pattern, which our pattern is these two lines. It's holding above our new supply zone, or excuse me, new demand zone, which is green box. And it gave us our first bullish engulfing out of that zone after a bullish engulfing rally. Very impulsive rally. All right, so we should really be looking for opportunity to buy, not sell Euro USD. Not saying that it can't fall from where price is at right now to, where it could potentially go down here is over 50 pips. So we could take that move if it gives us that opportunity. But why look for the sell? We could, we could probably try to capitalize if it does show us room to, make a move down here. But why would we focus on 50 pips when we can focus on 100 pips? Almost about 120.
Yeah, you're right.
Almost 200 pips.
So you want to buy in when it gets down to that zone there, right at you got that box and that blue arrow.
Yeah, yep. If once it gets down around,
so right about now.
Once it gets above right around 1.107 to 1.1027, anywhere in that range, if it holds, I'm gonna take a buy. I'm gonna take a buy in there. I'm definitely gonna take a buy in there. All right. So we do have that pattern here.
But doesn't it look like it's gonna heading up already, or you think that's just how the market works?
I mean, it does look like it's heading up because we have, technically we have a higher low right here right now. We have low, higher low.
Yeah.
High, look at this. High, low, higher high, higher low.
So we'll be putting our stop loss 1.104 zone.
No, if we're going to be buying, we're going to be looking to put our stop loss down around the bottom here. I mean, 104 is, it's only about 30 to 40 pips. I mean, that's okay. That's okay because, if it does break this, it's especially with a nice bearish impulse, then we could be, headed down to find a new low. But realistically, you would want to be putting your stop loss under the previous low.
Oh, all right.
At least 5-10 pips under the previous low. I mean, the trade, if we were to get in right now, which there's no way or rhyme or reason right now to get in, but our trade would look, something like this. It's about 60. If we are trading properly, structure-based trading and risk management, we'd be looking at about a 60 to 70 pip stop loss for at least 100 and about 15 take profit. So we're not even hitting really a 1-to-1 at that point, or excuse me, a 2-to-1, or a little under a 2-to-1. But this is what our trade would look like. Now, if we drop down to the 1 hour, we see that we have this, our bullish engulfing. This is our bullish engulfing here. So if we were to get a retracement here that holds around this 50 to 61.8, and we then, say we get that market comes, makes that move that it made, it comes down, taps a little bit under, and we get in, and it makes a strong move up to crack this high, this resistance area. Yeah, then we could look to, possibly take a smaller risk on the trade. Maybe a 20 to 25 to 40 pip stop loss.
So would it be smart to, as soon as Monday comes, just hop in?
Well, possibly. We can always look to see how it plays out on Sunday at, between 5 and midnight.
Between 5 and midnight?
Yeah, because the market opens back up at 5 on Sunday.
Oh, shit. I don't know.
Hey, so I just figured something out.
The market opens Sunday at 5.
You hear me?
What happened?
I'm looking at all the world currencies.
Uh-huh.
Hold on. All right, so that one doesn't match up. The GBP world currencies, all pairs that all the pairs that match up with it follow that exact pattern. Can I see the screen right quick?
All right, right quick. Go ahead.
My XRP sale just dropped a little bit more. I'm in $2 in profit, and I'm waiting for my Bitcoin sale to drop too. See, look.
Wait, what? So what's your realization?
This the word currency, right?
So yeah, Ross,
Hmm?
do the comparison thing.
That's a lot.
Nah, do.
All right.
Yeah, do that comparison and type in the pairs that you wanna compare against that.
So everyone that's paired with GBP is all the same.
Not necessarily. You'll see. Most of them may match up, but
Nah, just the ones that I have right here.
and you be looking on that lower time frame too much, bro. It's confusing as hell. I'm telling you.
They come fuck with you and then come back and spot. Op-ass nigga.
Oh, some of them are higher. Oh no, I'm bugging. That's a mirror.
Still spot.
GBP USD.
says loading. Oh, there it is.
Damn.
See?
Scroll it, zoom out more. Close that side window out. All right, so you see how what's that one? Stay on the daily real quick. Just bring the charts down a little bit.
Where they went?
They might be all right there. Yeah,
They all see, told you.
Oh, they all overlapped, yeah.
Mm.
Pretty much the same.
Now go to the 4 hour. Nah, that's not all of them. That's just the MA.
Uh-huh.
Reload.
Yeah, they all overlapped each other.
No.
That's not even. They're not even showing. They'd be all different colors. All right, cool. So they are all moving kind of structurally the same. Close that side window out. But you see how you got your pound currency. You got your pound currency here. This is breaking it, looking like it can break out to make a higher high. All right.
Yeah, it looks like it.
Potentially, or it can respect this level because we are retracing. So this would be potentially like our 38 to 52%, which could bring it back down. This could just be a teacup within a teacup to drop the market down. Now, looking at our GA, which is this yellow one. GA has a high, a low, and then it's flagging.
Oh, shit, yeah.
What is the flag? A drop.
A drop, yep.
So is GBP NZD, which is this orange one.
Yeah, they all supposed to drop.
Low flag. Zoom. Yeah, let me see GJ.
This one already. Well, yeah, this one gonna drop too.
Yeah, we got a nice resistance in here. Retracement. I bring about our 51%. Wedge pattern, ascending triangle, drop. So they all do correlate, and this is why you would use them to use the currency indexes to actually see what most of them could be doing. Just because it's showing something doesn't mean that it's always going to happen, because we have fundamentals and technicals and shit like that. So that's actually a good eye, Ross, because I do know that, but I don't actually look to point it out as much. So that was definitely
the EUs don't move like that though.
The euros typically don't, because the euros are also geared by GBP, so they have that other aspect included.
Yeah, but the CADs do. So I mean, everything with JPY does.
Yeah, JPYs almost all look the same as well.
Hold on, I need to mark that. Hold on. I'm trying to figure out. I'm gonna move these to the bottom. Yeah, those don't match up either. All right, so these three move up. So
well, let me grab screen. Let me finish marking up Euro USD real quick. All right, so now focusing back on Euro USD here for a moment. What I want to point out about this 1 hour time frame and why I feel like we could get this move that I just marked out, this little play right here, is because we have our overall retest back into our demand zone, gave us a nice bullish engulfing extension out of it. Right at the 50 to 61.8 range, we have our first retest, and it could just be coming back down to retest it. But what really sweetens the deal for me is the RSI. Once again, RSI is one of my favorite trading indicators, and it's one of the only indicators that I use religiously. But just like I said, if we're making higher highs and the RSI is showing that we're making lower highs, we should be looking to sell. Well, look what happened right before this bullish engulfing extension happened. We had a low created by another low, but the RSI on the 1 hour is showing us that
I like cash in my
low. The lower low is actually a low to a higher low.
The lower low is really what?
You see how right here,
That's weird.
you see how our lower low, right? Big red arrow created a lower low,
Yeah.
right? But on the RSI, it's showing us that we have a higher low.
What the fuck?
And it gave us our nice extension. It didn't break the highs. You know, maybe it's just not ready to rock yet, but it did give us a nice extension, a nice bullish engulfing. It engulfed.
And then the RSI is higher than him, and it doesn't even look like it on a regular chart.
Yeah. Now, what did I say? Once it gets back around this, 35 level on the RSI, it typically takes a nice strong rally up. So now we're right, getting right back above the 30, 35, 37 range on RSI. If we come back down here and respect, well, it's just like structure on the regular chart. You have a low, you have resistance, support, broken resistance, turn support again. So if it comes back down here around 35, 33, 37, and you start to see this turn up, and you start seeing these candlesticks also forming, nice reversal indicators, maybe a bullish engulfing, maybe some wicks to the bottom, coming down to the lows here. Something that tells us we can look to buy, we should be taking our entry and looking to see if it can break this area here. 111.2. So that looks very good for us to be looking into for next week.
So a good buy right there.
A good buy right there around that range. We could be looking at about 108. I mean, it's not much further down than where we're at right now. So potentially it's only like six pips away. But about 107.5, 108, we could be looking to take our buy entries, and we'll be, looking to aim around here. Now that would be about a 3-to-1 risk to reward. Actually, a 3-to-1 risk to reward. Exactly the money. So that would be good if we can break that. If we can break that area, these highs. I don't know why this shit keeps doing that. If we can break these highs, let's take a look at the 4-hour.
You hear me?
Yup.
I reverse trade gold and UJ.
What do you mean? You counter trend traded?
Yeah. When gold go up, I buy it and I sell UJ.
Oh yeah, definitely.
Damn. I had it marked up as I was gonna go as a sell.
What?
Euro USD.
I mean, that's what
You
these
saying-
sessions are for. I mean, I'm not saying that you can't be right because the way your chart was marked up, it is, you know, it could hold suit. And we have nice bearish action going on. I mean, look at all these reversal candles, these bearish candles. We have nice bullish rally to give us our breakout. It tried to retest, gave us a wick, but almost a bearish engulfing, gave us a strong bearish move here. Our last push up gave us a bullish bearish engulfing to a bearish engulfing extension. And then when we did get back up into this range, we had a nice bearish consolidation that gave us this last extension. Once again, on the, you know, thinking about the Elliott wave structure, you have Elliott waves on, you know, almost every time frame. So if we get back down to the 1 hour here where our high was, this is our, you know, our breakout right here. That can be our one. We got our, you know, our 1, 2. We could use this as 3, or we could use this as 3. 3 is the longest wave, so you may have an extra wave within there. But we got 3. And then we have 4 and 5. That could be at the end of our Elliott wave. We can actually even start it right here.
We got 1.
So we got our 1, 2, 3.
Elliott impulse wave, right? Yeah, 1, 2, 3 ABCs.
4, 5. So I mean, after the 5, like I said, we need our ABC correction. ABC correction can be this: A, B, C. You know, somewhere up in here. But if we can break this level, then we can go risk-free, you know, well over risk-free. You know, we're about 50 pips deep into the trade if we can, you know, catch that entry down around 1.10800 and break this support resistance, break out of this trend. We can go risk-free, and all we're doing is shooting for the moon. Shooting for the moon. And I like to see my C wave come right in the middle of the 1 and 2. So we could be looking for that move that will play out next week. I do like that. Abel's looking for the same move. I mean, everybody's been looking for Euro USD to go bullish. And if you haven't been following the news, there was the biggest warning of possible largest recession a couple days ago for the U.S. economy. All right, so if a recession occurs, everybody's dumping their money elsewhere. Now, I'm not saying that EU could really fly up crazy. It's a good possibility, but we could at least look at our safe havens, which is gold and JPY, gold and the yen. Gold should fly up, create new highs, maybe even yearly highs, you know, ultimate yearly highs.
So according to the news, we should just, since we got the political warning, we should just be looking at the alternatives.
Hold on, is it news Monday?
Let's take a look here.
Damn, that's scary.
Why?
I mean, it don't got to be scary for us because we in the right industry.
We in the trade, yeah, facts.
So we do got all news at 9:30 p.m. on Monday. We have CAD news at 8:30 on Wednesday. We got FOMC. I think it's the last one of the last Wednesdays of the month. FOMC typically shakes the market. We got some Euro news on Thursday, NZD news on Thursday, and then Friday we have our core retails for CAD and our Fed Chair Powell speaks. She typically causes a little uproar in the market too. And then I don't know what this Jackson Hole symposium is. Let's see. Economy policy symposium held in Jackson Hole, Wyoming, is attended by central bankers, finance ministers, academics, and financial market participants from around the world. These meetings are usually closed to the press. Officials talk with reporters throughout the day. Comments and speeches from central bankers and other influential officials can create significant market volatility. All right, so this is something that we really want to actually keep an eye on. If we go back in time here, we see, we can use these dates to see what price did. So
I know when Trump say something, get out all markets and wait.
Yeah, you may want to get out the markets and wait. So
Wait for the pullback.
Oh, every time Trump says he's doing something, it creates a pullback.
Every time Trump tweets, it fucks up everything.
Let's take a look at what was this? Let's take a look at Euro USD last August 2018, August 25th, 2018. That's the last time we had this in the market here. So I'm gonna go to.
Is that because of Brexit?
No, this isn't Brexit.
Oh, it has nothing to do with it. Okay.
Yeah, nah. I'm really not the person to talk about with Brexit because I don't know too much.
Yeah.
All I know is that it has to do with GBP. All right, and then one time was this. This was at about. So we'll just do all day because it looks like it's all day.
What is that?
That's the press meeting.
Why all of them red?
Those are red folders.
Wait a minute, what day is that?
That's next week, period. You wasn't listening?
No, I'm saying, can you go? I'll just look. Hold on.
Wait, what is it?
It's red folders. So what I was looking at was the symposium red folder because I don't know what that is.
What date is that? I'm going bouncing between streams. That's why I'm asking.
I'm looking at August 25th of 2018.
Oh, y'all ate that day.
Let's see. I don't even see it here. It's like skips. I gotta see what day that was. August 25th, 2018. August 25th. So yeah, that was a Saturday. So the market wasn't even open last time this shit was hitting. But let's see, this is the 24th, last day. This is let's see. So we got it's about 5 o'clock here. So it pushed the market up. Not much, but it did push the market up. Let's see if we
So, do you think gold is going to keep going up regardless?
I mean, I'm going to be bullish on the bullish pair until it tells me otherwise. Feels like I'm not looking to go against the trend, but let's take a look at gold. Might have to mark this over. Not really. I mean, you could see what I was drawing at last time. I don't know who I was working with. But you can see,
It got to come back down.
It does it.
Yeah.
It does.
Yeah.
It has to.
Yeah, it has to come back down for that.
But it has to.
Yeah.
It don't have to. It could hold. It could hold above this price level here. It could hold above this pink box. It could hold above this pink box here. It don't have to come down. It's going to correct, but
That's what I was saying.
it may just correct on a one candlestick. That doesn't come back down much. So
So okay. So does it always have to come? Does it always correct to the 50, or what does it stop at sometime?
typically you'll see a correction to around the 50 to 61.8 of the.
All right. See, I was told it's always the 50. So 60. Okay.
We can't ever say it's always in forex. There's no always. But so say like right here, this is my impulsive move out, right? So if I grab that, my 50% would be right here.
Where? Hold on.
I'm on the gold daily chart, right?
Yeah, I did the fibs all the way to that fourth pink. 1, 2, 3, 4. Yeah, the fourth pink. Huh?
Right here.
Lowest one. Lower. Yeah, I did mine to that one.
I mean, that's shooting high hopes, but I'm a daily time frame, bro. We want to do from the last impulse, so the lowest I would go for now is at least right here down to these.
So when you're on the daily, you don't go down as much, but when you get to lower time frames, you go down.
I mean, if we're looking for buy, so it's not like your US. It's not like gold. If we were looking for buys, then yes, we would start. If we're looking for long-term buys, like the real long-term buys, right now we're in such a price. Oh my God, I'm gonna kill this computer. We're at in such a range here where, I mean, we could buy and keep going up, but I mean, this is our range of movement that we have. Look at right in this range. We have a order block. This is
What's the order block?
Order block is where we have a impulsive move to break a support or a resistance, break a zone. It comes back up, and we have, some type of engulfing pattern, something that just automatically rejects that zone again. So this is what I would consider an order block area here. So we're not too far away from that price range. We're not too far away from that price range. We're actually 54 pips away. On gold, 54 pips in
wow.
5 minutes. So looking for buys right now, we have to work off a smaller retracement level. We're never going to, if you're waiting for your buy to hit your 50%, this is a nice area. You see how price kind of consolidated, gave us our market pattern. If it hits down here in the 50% from that move, that would be a real nice entry opportunity. But you could also be waiting, a couple weeks, couple days, a couple weeks, maybe even a month for that to actually come down, because we're in an area where there's not really structure in the past. Where price is at right now, there's not really structure in the past. This is where the last area of structure really is, over 50 pips away. So we can use that just in case structure starts to fail. That would be our last ultimate real high to low scenario. But right now we want to focus more on the more current impulsive move, which would be this one. My shit is breaking out. All right. So like I said, I would draw from this. You see this impulse here, this nice green rally. That's why I'm drawing it from there, and we can use that movement. So based off of that move, if we're saying it always, if they're saying it always comes down to the 50%, there's very minor structure here. I think if price really does make a move over 100 pips, away that this minor structure is going to hold, much weight. I don't really think so. We could be coming down to around the 60 to 61 to 78% because look at the structure here. Resistance, 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 resistance.
No, yeah.
So to say that it always goes to the 50%, I wouldn't stretch that far.
And this is the 4 hour time frame, so
This is the
we should
4
be
hour.
looking at it should take 4 hours for it to that go down to that support line.
Yeah, exactly. Now short term, overall, I'm bullish on USD. Gold, ZAL USD. But we can look for intermediate plays because gold just is so beautiful. No matter which way you can catch it, a couple pips can put your account up nicely. So using our bullish overall, we can also look for some potential short-term bearish selling moves. Now on the daily, I'm going to point out just one that I can see, which is our divergence. We have a high here. If you look at the RSI, right where that dotted line is, that's a very high. But when the price chart actually made a higher high, the RSI made a lower high. High, lower high. So we could be looking at a drop. We really could be looking at a drop. Could be a nice drop. Going down to the 4 hour.
All right, so the chart says it made a higher high, but the RSI is indicating that's making a lower high.
Exactly. And then even look at the 4 hour RSI. Higher.
So what's the difference between that and volume? Because I look at volume.
I'm sorry, brother. I don't know volume. I don't use volume at all. Never have. That's something you might be able to ask Skaggs to get a clear answer or able. Couldn't tell you much about volume though. But on the RSI, we have the same thing. Higher high, but the RSI is making a lower high. All right, so we are seeing opportunity where this market could start failing and dropping down a little bit. If we want to draw a trend, we can even draw a trend to try and trap the market up a bit.
That's his name, I'm sure.
And Ross, I do apologize, bro. It's not that I don't care to answer your question. I just don't use it. But I mean, let's see. We could use these lows down here. I like that. Shows us already, our impulse correction potentials. And then we do have, this little bit of a trend.
Get back. Cage. Sit.
We do have, this trend.
Sit.
So we're kind of working the channel.
Sit.
Which can be turn out to be a bearish channel for us. Yeah, we are working in what could be a channel, but we're just trapping price. So now to see if we can find potentials to get into this sell here, we'll just keep going down. We know we got divergence for a sell on the daily and the 4 hour. All right. So now we also have a little bit of divergence on the 1 hour. Got a little, slightly higher highs. RSI is giving us lower highs here. All right. We also have our impulsive move, which Ross, I was actually pointing this out to you the other day when we trades. We have our impulsive move, so now we have our correction, and we can measure our pullback. Well, you see our pullback failed.
The correction is that that
The correction is the
retest,
pullback.
because it made that major drop, and then it came back and touched that line.
Not that it touched the line. I mean, the line is just something that we drew to help trap price and keep us focused. The retest is just a test of a previous level after an impulse or something. So we have our impulse here, which technically gave us a new low.
Yeah.
So it broke our low, right?
Yeah.
Now after that, for a potential lower high, new lower low, this is our pullback to see if it can break this level.
All right.
Right, so we're we broke above. I thought we was gonna fail more or less around the 50% exactly, just based off of this potential head and shoulder. But we still have a head and shoulder that is in play. I mean, the right shoulder can come up higher than the left shoulder. I don't typically like to see it happen that way, but it can. And then we also have a head and shoulder on this right shoulder that could be, playing out as well. So right now we have, a 61.8%. It's failing here for the current moment. We could see this push down back down to the lows or even further to hit our trend line. All right, so if we we use that, we go on to let's go down to the 30-minute. Or once again, I'm just gonna take from the high to the impulse. This would be my impulse here, going down. And we're also hitting the 50%, which is our last break.
Oh, wow.
Our last break and retest came around that 50% right there.
Right.
So we really can be looking for opportunity to, look to take this market down a little bit. The only thing that has me held up here is, once again, we're bullish overall. We're bullish overall. Besides the RSI confirmations to look for sells, because the RSI is never going to say it's definitely going to sell, but for our confirmations to possibly look for sells, we have the RSI, trying to match up to what we're putting together here with this impulse, with the correction. But we also have some divergence on this 30.
I just I look at the Japanese world currency and see what that's gonna do, and then based off what that does, UJ move, and then when UJ move, gold move.
For the most part, yeah.
Well, gold moves before UJ. Gold always moves before UJ.
Yeah.
I sat there and watched both of them last week side by side on MetaTrader.
Okay.
And right now, UJ look like it could be going. UJ in an uptrend right now. So, I mean, not UJ, but the Japanese currency is in an uptrend right now. So, ooh. Wait a minute. How can that be? Oh, wait a minute. I'm looking at the wrong time frame. I'm tripping. Yes. Yep.
So we do have, a bit of divergence on gold. Just, small time frame divergence, but it could give us what we need to actually continue our bullish move and our bullish overall, as we're still respecting the breaker structure. as long as it stays above this zone here, I'm not really looking for something. It actually has to break. It actually has to break these lows. Has to break under this 0%. And then
So I have a question.
yeah.
So, as I'm looking at the charts and everything, a lot of times I'm looking at my charts because I'm trying to figure out how to directly use the EMA.
Mm-hmm.
A lot of times that plays as like a moving support.
It does. Yep, the moving.
It plays as a moving support and resistance.
Yep, the moving.
That's like a good, to me, that'd be like a good time to get in, like for a sell or a buy.
Oh yeah, well, Abel had a strategy that he put together. He called it the dragon strategy, into the dragon strategy. So he was using the 50 MA and the 20 EMA.
Why you didn't touch the horse?
And he would use how they cross to provide a entry opportunity. It was for getting better entries.
Yeah, that's what I do.
Yeah, so that's definitely a cool thing to do, especially once you really start to understand them. I took the moving averages off the chart, and I haven't used them in months.
Yo guys, I'm gonna keep this. I'm gonna keep my eye on these things. I'm gonna head out.
Actually, I'm about to head out. I'm about to head out as well, though.
Yeah, I gotta get in bed soon.
Yeah,
So
so
I wake up in the morning.
we'll look at a few other charts tomorrow. I'm about to
Yeah,
crash.
let's do that. I get out of work at 7:30, so I'm gonna hop on. I gotta be able to explain these charts to y'all. So I wanna try to explain the chart, try to mark up a chart, and send it back to you guys, and just help me correct it.
Gotcha. All right, we'll do that, and we'll be here when you're ready, bro.
All right, bro.
Hey, you want to look at XRP with me, Rup? I mean,
Yeah.
Bitcoin.
I'll look at it real quick. I'm about